Good morning, good afternoon, good evening, wherever you are, whenever you are. Welcome to a new DC live stream. My name's Matthew Batiri, here with you once again on a Monday to give you a market update and to look what is going on in the crypto market, especially Bitcoin. It's obviously had a fantastic last month, one of the most bullish months in its history in January. So without further ado, we will get stuck into the technical analysis, and we'll hopefully look at, is Bitcoin going to go up, is it going to go down, or is it going to go sideways, because people always would like to know. But before I do so, we've got an amazing event on how you can generate passive income, 7 of them utilizing digital assets. We've got the link just below, so go to breakoutnow.co/income-event. From there, register your interest. The webinar is on February 12th, because obviously in the last 12 months, if you had invested in any crypto, you are more likely down on your investment. However, ourselves here at Breakout Solutions and our clients have been generating passive income during the bear market, so we can continuously make money even if we are not trading or shorting the market. So with that being said, Bitcoin on a bit of a rampage. As we can see, 4 beautiful green candles in a row. Now, what we tend to see when we have a bit of a market reversal is we'll normally get about 9, bullish candles followed by a 1 to 4 candle correction. And this is kind of like a very repetitive system when it comes to trading. And this is based off what's called a TD sequential. So it's one of many indicators out there. So if you'd like to check out the TD sequential, all you need to do is head over to TradingView, find yourself the TD sequential as an example, like so, and we can see actually we're on week 5 of a 9-week bullish candle. So just to give you a bit of indication, here is a bit of a history lesson on the TD sequential. So we can see a 1 to 9 candle pump. Then we had about a 1 to 3 candle correction. We then had another 1 to 9 candle pump. And then you can see we have a bit of a correction. It doesn't always get it spot on, but you can basically see that when it does, we got to 7 here. Then we had a 6 candle correction. Then we had 9 here. Perfect. 4 candle correction. We got up to 6, 4 candle correction. We got up to 9, had a couple of candles correction, another 9 bullish candles, and so forth. So it's one of many indicators, but the purpose of indicators is not just to put all your money on one indicator. It's to obviously use many of these indicators in confluence with others to get price points that you feel are going to do well. So if we are to get a full 9 count of the TD sequential, that means we've got another 4 weeks of bullishness. So I just want you to be aware of that. So without further ado, let's look at a couple of other indicators. So we've obviously printed a new week on the market side. We can see that now the red money flow has taken a good steep dive towards the 0 line, which is this white line right here. And normally when the money flow, which is this red wave, crosses over the 0 line into the green, we can see that in history that's been quite bullish. So let's have a couple of let's have a look at some of the previous times where that has occurred. Let me go here. There was another one here. Let's go back a little bit further in time. There it goes here. And that's all. So 3 other iterations in time has the money flow gone from red to green. So we can see that this time here wasn't fantastic, but we can see by market cipher B, we kind of had that crossover, went green, then red again, and then we had another cross here. So let's not worry about this one, because this was like, I guess you could call it an invalidation. But as you can see, we did spend a fair bit of time in the red money flow, like what we have done here. And then we had this amazing bullish pump. So even though we're still in the red money flow here, like we were back here, we could have an amazing bullish next few months. And that's what I'm kind of expecting with Bitcoin, is a nice slow progress and possibly hitting up to about 50,000 US dollars. So this second time where we crossed over from the green to red, you can see here we had a very good bullish month. We had the COVID dump, very unexpected black swan event. And then back here in 2015 was the last time we had the red money flow on the weekly, crossover into the green, and that was what caused the exponential bull run. You can see that even when we were in the deep red money flow, if I zoom into here, very similar to where we are. Let's just even talk about here. So let's just say we did continue, we could get a decent pump. I mean, from here, even in the red money flow, we got a green dot. We went from $220 to about 309. So that was a pretty good return on your investment. So apart from that, let's have a look at a couple other things on the weekly. We can see that the MACD histogram candles are still pushing to the upside. Moving averages is taking a good push to the upside. We can see that there's a divergence between both the moving averages, which means it's very unlikely they're going to cross into a bearish standpoint for a little while. The stochastic RSI is overbought. As we can see here, we're pushing into the overbought territory, which usually means, Bitcoin is either going to stall out soon and have a bit of a reversal. Now, we can stay in this upper echelon of the stochastic RSI for a while. You can see here that we basically stayed from the 18th of March 2019 all the way to the 27th of May. So it's March, April, May. So 2 months in the overbought, and that's where we had this amazing pump from about 3,000 to 14,000. So we could do something very similar, especially since the MACD moving averages are, splitting apart. Very similar to what we experienced back here. We can see on the MACD, when these moving averages do spread apart, we can still get a really good push to the upside. Alrighty, so that's looking at just, potential, there's some positivity out of these indicators. So where do I think Bitcoin would max out? So I definitely think Bitcoin would max out at the 618, which is up here around about $48,500 to $50,000. And now it has done that in the past. Another time it hit its golden pocket coming out of the bear market was obviously the last bear market here in 2018. We can see if I take it from high to low, this mid bear market pump, where we went, as I just mentioned, from about 3,000 to 14,000, we hit this golden pocket exactly. And I've covered previous videos where we've done that as well in the previous bull and bear market cycle. So you can go check out some of my previous videos on all of that. So I don't know if this time is going to be the same, where we're going to get an amazing pump to about $50,000 over the next few months, but it is a good thing. There are good indications pointing in that direction because a lot of the indicators did bottom out. So hopefully we can obviously continue this amazing run, but I do think we need to cool off because we've had basically, we've gone up from that $16,200 mark, basically vertical. Now, when we go vertical, the unfortunate thing is you don't build any base of support. So here's an example right here. In the 2020, 2021, we basically shot up so fast that we had no real support on the way up. The only support we did sort of create was here, where we had this bit of a sell-off from $42,000 back down to $29,000. It supported us back here in May, July, and June, July in 2021, which also provided a little bit of a bounce here in early 2022. But right now, we had this, constant sell-off because on the way up, we didn't build any foundation. So because we need foundation to provide support, I keep saying it in most of my videos, I'd love to see Bitcoin sort of pull back, test some of the areas around here as support, so we can continue moving up, but feel confident that if we do have a bit of a sell-off, we're going to see some support in the market. So if I zoom into the daily, where could we basically find support? So if we just take it off the current price action, guys, so current price action and not future price action, we can obviously draw a Fibonacci retracement from low to high, so the bottom, and we can see that we have a golden pocket here around 18,700, right? So the top of this week here, it's a golden pocket. So that would be one of the worst case scenarios, but still maintain the bullish posture that Bitcoin has. An even better and bullish scenario would be actually coming down to the 382, which is around 20,709. So those are two areas where I'd like to see at current price action. Now, a lot of people are talking about Bitcoin possibly going to at least 25K, which was the high that we had here in August last year. And this zone here would have a lot of liquidity, because a lot of people, whenever we have sort of breakouts, a lot of people are going to long this area because they're like, you know what, we're coming out of a bear market, we're creating even a higher high. So there'll be a lot of liquidity here for the possibility of a swing failure pattern. Or a failed auction, which basically means we spend a bit of time above a previous local high. A lot of people, as I said, try to go long, thinking, sweet, where the bear market is completely over, we're now going to go to the moon, and they're going to put in a lot of money in the market, and the bears are waiting for us with all this liquidity ready for us to sell it off. So if you do have TradingView, you can obviously draw your own fib line. So let's just say we do the fib from the previous high over here, so 25,200, we can see that the golden pocket does raise up to about 19,200, and the 382, 21,500. So what I would like to look at is some confluence in these areas, and in order to do that, we kind of want to look at the CME gaps that have been printed during these pumps. So we've got a huge CME gap that we can see right here. All right, so this is a CME gap that has not been filled during the pump, which basically means there's a lot of liquidity here that if we do come down, I expect some support to be created. So that is between 20,400 and 20,000. Does that bring us some confluence from the lows that I was talking about? So we did the low from here is a little bit different to the low that was on the other price action, because this is the CME. But we can see that the 382 from current price action does basically line up with that CME gap. So that is an area where I think we could see a lot of support if we do have a bit of a sell-off. So it's only about sort of $3,000 from where we currently are, which would be a nice healthy correction, especially since we've, you know, from this here right here, we've sort of pumped up 50%, right, in market value. And from the absolute bottom of the CME, we've obviously gone a little bit higher, 61%. So these are a couple of areas that I'm looking at. The other confluence I would look at is where the most amount of Bitcoin has been traded in this entire sideways range. Okay, so we've got the point of control here at 19,100. We do have a high volume node, as we can see here, this spike of horizontal candles, so that kind of does line up with the CME gap. So I'll be very interested because it's also a psychological level, that $20,000 level, very psychological. If we can maintain that, that's only going to make things a lot more bullish for the market. Right now, there is a $200 discrepancy between the CME Bitcoin futures and the actual price action on exchanges. So you can see the price action on exchanges, 23,740, and the CME is 23,900. So this makes me think that we should have some continuation in the market, but I think we're going to see a lot of volatility when we sort of come up here. I think there'll be a lot of people shorting, but it also could be a bit of a trap for the bears, because obviously from here, if we do break this zone, we have a big push, big push. Then obviously I'd be looking around about that $28,000, which is where we had this consolidation back here. So if I throw on my fixed range profile to see how much Bitcoin was traded around here, we can see that we've got the value area low at 28,700, which also lines up, as I mentioned in our my last market update. If I do a horizontal ray from here, okay, we can see that we've got a lot. We had support here. We've got the value area low of this entire sideways range, basically at 28,800. So that is an area that I am looking to short if we absolutely slice through the $25,000 area. I do think we're going to get a continuation to the upside over the next few months. I can't obviously predict if right now if we're going to get a pullback from where we are now or from a little higher. I would expect a little bit high because we're kind of like in a bit of a random no man zone here. We're above the value area high of the entire sideways range. So this was obviously acting as support. You can see that we spent an entire week here. So it makes sense that we now go to the next area of resistance, which is this wick here, which was also the tapped wick candle wick from the 15th of August. So I would assume we should go up to this level, and then I think we're going to probably hopefully see a pullback, give people the ability to jump back into the market that missed all this action, especially with the CME gaps that we've created below us. So these CME gaps, they have a higher rate of being filled over the long term. There are still some CME gaps from the previous bull market that have not been filled. Let's have a look at a couple that we can possibly see. I guess that one was filled. There's this. No, that one was pretty much filled. And then it looks like most of them have been filled, to be honest. Which is kind of a good, so we had one, the one we had here was around 19,000, which is good. I think people did say that there is one around 13,000, but I can't see the one around 13,000. So no, that's the 18,000, which has already been filled. So you can kind of see that these CME gaps do get filled at one time or another. We do have a CME gap up here to the upside, as we can see. So this is also why this gives me a pretty good indication that we might even slice through this 25,000, go straight to 28,000, and then maybe have a lot of shorts waiting for us here to fill this CME gap right there. So whatever does go up must come down, especially because we're going up pretty aggressively. So if we do come down, look for some confluence around those fib retracement levels, and also the CME gaps that have shown themselves up because of this huge pump. The last thing I want to leave you guys on is we did have a hash ribbon indicator buy signal flash, which basically is very bullish, right? This is when most of the miners are turning their miners back on because they're becoming profitable again. So the hash rate is an all-time high. Once again, we flashed a buy signal, a couple of weeks ago. I'm not too sure if I talked about it last week, but basically that is a good signal. Usually, a lot of people use these buy signals as, buy opportunities. And when we see a capitulation where the moving averages do cross over, so you can see here where we see this redness, that's usually a good sign to sell. But yeah, like I said, short, medium, and long term, I am still bullish. I do still think, like I said, we do need a bit of a pullback. It's been a pretty good pump, which is great, but we have not yet set any sort of foundation to continue moving up. And if we go up too quickly, we're definitely going to fall quite hard and fast. So that's it from me, guys. I see I've got one comment. No, I've just got someone that shared the link from our upcoming webinar. So guys, thank you so much for watching. Make sure you like, subscribe, and turn on all notifications. And during the stream, feel free to ask me questions about my technical analysis. Maybe you have some input, maybe you've got some questions. So make sure you always leave me a comment, and I'll be sure to answer them during the live stream. But apart from that, yeah, things are looking really good with Bitcoin. Do we get to 25? I do think so. But do we smash straight through it and fake out all the bears with all this money hanging around here, and then do we move up to 28.8, or do we finally hit some resistance and we have the long-awaited cool-off? Because look at this, guys, basically straight up since the 30th of December, and we're now the 30th of January. So we've had an amazing month. Let's have a quick look. Once again, 47% over 31 days, one of the best performing months in Bitcoin's history. I'd love for it to continue, but I'm also realistic that we need to see a bit of a cool off to get more people back into the market, because once we have a pullback, that generates more liquidity because people feel like they've missed this entire thing. And we have created a higher high than all these previous highs, but we have not yet created a higher low apart from this one. So I want to see a secondary higher low to give me confidence, because we're doing all the right things, but we do need a bit of a cool off so we can get more people back into the market. All right, guys, that is it from me. Catch you tomorrow for our DC News live stream, and Wednesday for our altcoin technical analysis video. Bye from me. Catch you on the next one. Bye.